The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, the big news yesterday, of course, was the grain report. Surprise, surprise, surprise. It wasn't nearly as bullish. In fact, it had a tad bearishness, and now we've seen the grain start to sell off a bit. That doesn't mean that it's over. It just means this is the first correction. Folks, yesterday we talked about the November soybeans. They're now down 36 cents from the high. They're trading at roughly 10.09, and that is a 1.618 expansion of the last hourly move, and it is also 36 cents down in the soybeans, and the harmonic number in soybeans are 36 and 18. So watch that very, very closely. One of the things that I tried to do yesterday was to show you some of these reports that were coming from Wayne Hightower and Bill Gary and a whole bunch of other folks that are masters of fundamentals in the grains and how bullish they were. Rich had sent me 7 of the services that he subscribes to, and all 7 were wildly bullish. And as you can see, it was 0 for 7. Now, that doesn't mean that it's over. It just means that that's a first correction. And the most important thing to remember is that's a USDA report. And believe me, if we know anything from history, is the U.S. Department of anything usually has numbers that are sort of suspect because they change them, in the following week. So those are the bean counters. Whether that means anything or not, I don't know. We had certain signs, of course, that, we had reached some pretty stiff levels in these grains and stuff. But that doesn't mean that it's over. It just means the report is over. Folks, if you want to do yourself a real favor and try to understand some of the psychology of this, spend $3 and go to a huge bookstore and buy the book Reminiscences of a Stock Operator by Edwin Lefevre. It's a story of Jesse Livermore, and it is just filled with technical things and also with some of the greatest psychological things that we live and die by. But he really puts it very, very clearly. And not only that, it's a very entertaining book. Besides that, it was very, very well written. It was made into a movie, by the way, many years ago. Jesse Livermore was played by Richard Crenna. And I cannot remember, something like The Boy Who Killed Wall Street or something like that. I don't remember the exact name of it. I didn't have a chance to look it up this morning, but that's a really good movie. I don't know if you can still get it on Netflix or whatever, but it's a great movie. Another movie, since we're talking about movies and what we're in the environment that we're in, in right now, there was a movie done in the 1990, I believe, 1989, 1990, called Rollover, with Chris Christopherson and Barbara Streisand. I believe it was Barbara Streisand. Yeah, I think it was. Anyway, it was about how the money is rolled over in Treasury bills and stuff. It was very, very interesting. Intrigue has all the stuff necessary to make a good movie. So that was called Rollover. Let's get back to the situation at hand, and that is these markets and stuff. Let me post a chart for soybean meal here, folks. This is before the market had the report yesterday. Let's just get this up here so we can take a quick look at it. As you can see, soybean meal made a new bottom down on the new moon of June 23rd. It was making a new bottom. And then in a matter of 2 weeks, it's rallied just a little over $4,500 a contract, and it stopped, as you can see, exactly at a 78% retracement of the high that it made back in February. And of course, with the news out last night, it broke well over $7 a ton, which is $700. Now, we also focused on the soybean oil. If you'll remember, the soybean oil during this time could barely make a 382 ABCD correction and was not participating. Well, the main thing is the difference between the meal and the oil. When they crush the soybean, and there's usually 3 beans into a pod, and when the crop is really bad, you only get 2 beans to the pod, and that's when you get beans up around $12, $14, $15. But the main thing that you want to remember is the meal is about 75% protein and of the thing, a 50-pound bushel, and then 20% of it will be the oil. And oil is the margarine and all the cooking oil and the paint and everything it's used for. Actually, the soybean was brought to the United States by Henry Ford so that he could make paint, oil-based paint, instead of lacquer-based paint. It was much easier to use and easier to work with, and you could add dye to it so you could get colors of the car other than black. All right, those are just old things from history. We'll just move on here to the next one that we want to look at. We've had a question from one of our listeners. Does the euro or the foreign currencies react to the full moons and new moons? Folks, I think everything reacts to the full moons and new moons, but I'm just a tad biased. I have, Al Larson from Money Tide up in Thornton, Colorado, who wrote the book The Electric Life, which is all about the moon, really knows this. But what if you'll do here, do your own work yourself. Take a look at this diagram that I have here for you to see. This is the euro on a 4-hour chart going back over the last say 6 cycles in full moons and new moons, a little more than that, 12 cycles. And if you go back and look, I've marked these little red boxes where the full moons and new moons occur, and they're usually within one day of a pretty substantial move that could last anywhere from a couple days to as long as a week. But it's a very short-term cycle, and it's more of a trigger cycle than anything else. The other planets, like Mercury and Venus, I believe those are the ones that cause the longer-term pattern. And in fact, that's what the astrology stuff is all about. But here again, I certainly haven't found the Holy Grail. That's the understatement of the year. But that's neither here nor there. The fact is that we're looking at something that does work and doesn't work all the time. But folks, there's nothing that works all the time. That's for sure. Yes, I did mention about Norm Winsky when we had him on last Thursday. He said that either Tuesday or Wednesday was going to be suggested top. In fact, he has on his service, if you belong to Norm's service, he has a cell alert signal coming in today. And, of course, we've had monster moves here in the Dow Jones. Now, 1 second, please. The Dow Jones went up and made new highs, but even when it broke out, I mean, it closed 50 points lower than its high yesterday. It's basically Amazon and company that is taking the market to the upside. And that's one of the things that I wanted to talk about in some of these stocks that we have. And I believe one of them that is really interesting, of course, is the Apple. And let's take a quick look at this. And you'll see the Apple has, of course, been the leader. And everybody has Apple. But nobody has everything like what Amazon and Google has. They have everybody on their side. But you'll look at this Apple chart. You'll see that we've barely made a 382 retracement back on the 26th of June. Even now, we've only rallied back to a 61% retracement of that high, and yet you can see the blue line there, which is the NASDAQ 100, of which, Apple is a big component, but there's other components like Google and Facebook and Amazon that make this thing go to the upside. So we're having what we call a conundrum, whatever that is. 877-927-6648.
John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before, so now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking with, I believe, our good friend, Mr. Z from Philly. Are you there, buddy?
Larry, yeah, good morning.
Good morning to you. What's up?
Yeah, thanks for taking the call. I wanted to follow up, please, and just ask for your input on pattern and Fibonacci number trading. Specifically, you mentioned soybeans. Further, beans declined from the high Monday night, 1047 down to 1022, bounced to make a lower high, 1045. Now they've gone under 1022 this morning, and I'm looking, sorry, I can't post on the Tiger's Den, but I'm looking at a 4-day, 10-minute bar chart, and I see down at 1009 that pattern is such that the 1045 to 1009 decline is just 618 expansion of that first push down.
Yes.
Now, just for reference sake, when trading 3 drives to top or bottom patterns, or butterfly to top or bottom patterns, the patterns you've laid out in your various textbooks, using the 1272 expansion marks as targets to enter buys or sells with tight stops. I know how to do that, and I've used that. And that's just something you've taught in some of the webinars you've done over time. Mm-hmm. Right here in beans, it's a different situation. In other words, we went from 907 to 1047. Now we've backed off, and as you rightly point out, all the people that trading and writers are quite bearish. And of course, this is a correction, whether it's the top or not. Of course, we don't know. But since it's a first move off a high, do you trade a 1618 expansion here, or is this the kind of wrong setup where you'd apply that tool?
Well, John, I would like to tell you the answer to that, but if I told you, I'd have to kill you because that's a secret thing that I keep as far as my my super double, triple X, triple diamond tutoring method that I cannot divulge. But because it is July the 13th, I'm going to let everybody know what it is. When we do these patterns, two things you got to remember. You never know whether it's going to be right or wrong until it's over, right? And the second thing is you don't know how much you're going to make. So the only thing you can do is control your risk. The one thing that I really feel strongly about is that 1.618 expansion. If you've ever looked at the chambered nautilus, you know, the what do they call it, nebula, you know, that our solar system looks like, the spiral that you see in the tornadoes and everything else. The end of that spiral is at 1.618. And I believe that's why if you go beyond 1.618, you don't know where it's going, because the only number after that is 2, and then 2.618, and then pi, and then 4.25. I mean, it just keeps going and going. So 1.618 is really very, very important. And the reason why is it's the amount of risk that you have to take at that point, because you're talking usually on a soybean trade like this, it's it's got a $60,000 value. You're looking at risking about $200, 4 cents. So that's why the 1.618. The ratios come first, and the patterns come second, because mathematics trumps geometry. So that's that's what Einstein said. But anyway, I hope that helps.
Yeah, and what did he know?
Yeah.
Great. That answers the question very well, so I appreciate that. And I'm going to drop off the line ahead of the stock market open and listen with all ears as to what yours and Winsky's interpretation of this is.
I'm sorry, the program for that section's been canceled for the day. I have no idea where it's going. I think here's my 2 cents worth, John, and this is exactly what happened in October of 2007, and it also happened in March of 2000, and that is one or two segments of the market pushed the market higher. Back in 2000, it was the dot-coms. In the 07, it was the builders and the bankers and all that stuff. I just think this Dow going up in the new high ground is not a big deal. If you look at the chart of the Dow, it just doesn't, this is not, I don't think it's a breakout, but, this is, the open interest in the NASDAQ yesterday, with the NASDAQ up 75 points on the 100, had a drop in open interest. That's short covering. I mean, there's no new buying coming into that market. So that's it. The question that they're asking on the Qs, do I see a 3 drive or a 135 on a 60-minute chart? No, I don't. It's just been a vertical run up. The 78% retracement came in at 55.89, and of course we exceeded that. We hit 58.12 last night. It did a little butterfly up there on a 5-minute chart, but there's nothing there. So that's my feeling what's happening to the market. But I'm flat out wrong, because I didn't think the NASDAQ could rally back almost all the way to new highs, not after that 500-point break we had. That doesn't make any sense to me, but a lot of these things don't. I hope that helps, John.
Yeah, it does very much. One last parting thoughts. I've always found utility, and I'll share this with you and your listeners, in pullbacks or bounces into prior swing highs or lows. Crude oil was an excellent example of that. Yesterday, crude, the September contract got up to 46.65. The prior swing highs from down lower, 45.09, 45.04. This morning's low, 45.15, and we're almost a buck higher than that now. Just shows the power of paying attention to that little tool.
It really does. And, if a person would just go back and study what the market did previously, he'll see it repeating itself over and over again. John, I've been doing this 55 years or more, and that's all it's ever done is repeated. One day to the next, to the next, to the next. I mean, it'll change a little bit, but overall,
sure.
It's just basically repeating up and down, up and down, up and down. And if you try to find that rhythm that you're in, then you've got something that you can hang your hat on. So.
Larry, thanks so much.
Hey, thank you, my friend, and thanks for calling in. I always enjoy talking to you, and I learn a lot. And thanks for helping everybody in again, because you had a lot of folks along some of that stuff. So congratulations. Okay, let's talk just a second about the crude oil, folks. We did get up yesterday. Just put this up, and we'll take a quick look at it here. You'll notice here in the crude that we had this big rally yesterday. 1 second, get it up here. You'll notice that we hit the 61% retracement from the high that we made back on July the 4th. Now, whether this is going to complete a third drive down to 43.20, I'm not sure, but that is my guess. And the reason for that is the market should have been a lot higher, a lot faster. That, in other words, after that major bottom on that 3 drive, I know it's rallied a couple bucks a barrel, but if it was really good, it wouldn't have stopped exactly at that 78% level of the previous swing and 61 of the total swing. So that's my 2 cents worth. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I posted the chart for Bill Meridian that he talked about just recently. as early as a week ago Monday. If you'll notice this chart, now folks, this is not just from somebody just coming off the back end of the turnip truck. Bill is just a few years younger than me. He's been doing this stuff. There's only a couple of guys in astrology that are at his level: Alfie Lavoie, Rob Hand, Bill Meridian. I mean, these guys are in a really stratosphere. Norm Winsky, I mean, these guys really know the stuff. But this cycle that he's showing here is basically, what we're watching is, all cycles and years that end in 7. That's basically what it is. And remember, Bill was the Timer Digest of the year in 2016. He's still in the top 10 in the first few months of 2017. So he does know what he's doing. We also have Stan Harley on the show, and people ask me, well, how come the Bradley model didn't work? Well, I was looking for market to be topping on the 10th. This is the 13th. Maybe it was the 12th. I don't know the answer to that. All I do is I look at these patterns, folks, and that tells me how much I have to risk. And that was it. When I came in Monday, I was very, very bearish with the stipulation that the market had to be down on Monday. And what did it do? It was up big. And that was the first time to say, well, that's probably going to go a little bit higher. And it did, because once we started to move higher in the NASDAQ, the rest of the market, moved along with it. What's amazing is the fact that the Dow Jones Industrials actually made a new high. Now, we didn't make a new high in the New York Stock Exchange Index, and we didn't make a new high in the banking index and some of the others. And Goldman Sachs looks like Apple. I mean, Goldman Sachs is a stock that should be sold, not bought. I mean, it's a much weaker than market stock. So that's it. Now, we had a question this morning from one of the listeners about the retail sector and Amazon. Folks, that's so above my pay grade. I can just tell you these real estate these stocks for Macy's and all the others, Nordstrom's, and JCPenney, they've been going down for months, if not years. So, Amazon found a better what do you call it? A better way to cut meat, or something easier to do. It built a better mousetrap. He built a better mousetrap, and he's proven it's right. So he should be worth that kind of money. Well, I don't know about that kind of money, but I mean that's quite a bit, So anyway, those are just some of the things that I don't understand. The retailing stocks and stuff. I just look at them. I looked at a couple, Nordstrom's and Macy's and JCPenney's. I don't see any bottoming pattern in these at all. Now, Amazon, it got up to a 78% retracement yesterday after, up about $20, and that was one of the main reasons we had the Nasdaq going nuts. But it didn't go make new highs. It just went to a 78% retracement level. So there are a few signs out there, just like we saw in the grains. That the oil was not acting well, meal was not acting well. But those are just signs, and that's why I think it's great if you'll read that book, Reminiscences of a Stock Operator by Edwin Lefevre. You will be pleased. I really mean this. I have read that book at least 50 times in my career, and it was really spectacular influence on me. And then shortly thereafter, I met Mark Douglas, and he had all the data to pretty much prove what Livermore had been saying in those pages. So it's a fabulous book, and it's good to read whether you're on a down cycle or an up cycle, because it's just a fabulous little book to read. And you can get them in any bookstore, usually for just a few dollars, and it's very, very good. He gives a few trading tips in there. I don't know if you folks know this or not, but Edwin Lefevre, Jesse Livermore's family were from the New York area, and one of Ed Dobson's friend, Richard Smitten, wrote several books about Livermore because he was actually a family friend, and he and Ed Dobson and Smitten actually, lived or worked together on some other projects, and so he wrote these great books about this stuff, and it showed the pictures of the Livermore's Evermore mansion and stuff like that. So these are the old things from the past and stuff, but as you get older, all these people have since gone away, and there's no history to, remind you of those things. Remember, when I started back in the 60s and 70s, some of these guys were still, kicking up pretty good steam, and it was really, in fact, that's one of the reasons why I met Roy Longstreet and his son Bill, because I tracked them down just to find out, what they knew. I was fortunate, of course, to have Bill. Oh my God. Oh my gosh! Can you believe this? Boy, folks, I think a little wind of old age just came over me, because I'm trying to think of my favorite mentor in Hendersonville, North Carolina, John Hill. Oh my gosh, his name escaped me for a second. Thank you very much. I could see him sitting at his desk, but John Hill was the one who introduced me to some of these masters, and some of them were still alive. My only regret was that Gartley died in 1969, and I didn't get that Gartley book until 1970. I would have loved to have met him. My good friend Don Mack actually knew Gartley, and he was he really had a big business. A lot of people that like technical stuff on Wall Street relied on him. And the problem was he had a lot of domestic problems that affected his life to a great deal, and he was also a chain smoker, which certainly didn't help him. Anyway, let's move on to the next one here that someone asked about. We covered the Bill Meridian question, and here again, you don't know the exact date, and even if it's going to be right or not. So hold on one second here. I believe we have someone might even be calling in. No, I've never seen that film, the Toast of New York. I don't know if that's the one about Livermore or not. I think the one about Livermore was called the Boy Plunger or something like that. The Toast of New York, I might have seen it, but I don't. Right now the gray matter is slipping into oblivion, I'm afraid. Okay, let's get back to some of these other markets here. Remember, we were talking about this euro the other day. And the euro had this, big move above the 1440 level, and then it quickly dropped 100 pips. Folks, when markets break out, they break out and keep running. And when they don't do that, that means they just went up there to see if there was any supply. And that's what appears to happen in the euro. Now, if we get above that 14.95 level again, then that's a totally different ball game. But right now, all that was a small 1.27 expansion. And when it's coming on the day of a full moon, I have to be a little bit suspect of that. And that's just the short term thinking behind the market that you're actually looking at. Now, I've been asked to post a chart here of our good friends at New York called Goldman Sachs. And you'll notice here that this market, after it made the 1, 2, 3, 4, 5 expanding triangle back on February the 28th, that was right after the speech to Congress. And you'll notice it's just barely made a 382 or 50% retracement here. This is not good action in Goldman Sachs.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Trading is different than investing. But the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a look here at the gold market because we've talked about this before. This is a long-term chart going back over almost 2 years. But if you'll notice here, there's a long-term daily cycle in there of about 142, and then double that to 284 that comes in here very shortly, either today, today or tomorrow. But what I'm watching here is the fact that we have two really strong numbers down here in the August gold at this 11.95 level. That's down about $16 from where we are right now. We could be there by the time I finish this sentence. But the reason why I think that's important, if you go back to look to May of last year before last, you'll notice it was a $107 break into that June low before it rallied $200 an ounce, and we're coming down $107 would take us down into this 1190 level also. That's why I'm watching it so closely. We've already seen a pretty good move in silver. It rallied about 60 cents. Rallied, almost 80 cents an ounce in silver. But if we look at this really long-term chart on silver, and this is something that I don't do very often, but when it's this clear, I think it's important. You'll notice that the downtrend line on this thing, let's try it again, the uptrend line on this is held ever since 2004, and we're sitting right at the 61% retracement, a 78% retracement, and we'll see how it's going to act. But anyway, that's why it's so very important to be watching this level in the gold. Now that's down about $15. That would mean silver would have already made its bottom at 15.12, and a pullback in silver would probably be the better of the two trades. But believe me, the liquidity in the silver is 1/6 of what it is in the gold. So I really don't think that that's something that you really want to be worried about. So those are just some of the things that we want to keep an eye out of what's going to be happening here, and we'll know a little bit more as we get through this thing. But this morning we've actually sold off a little bit in stocks. Hard to believe, but that's neither here nor there. Someone's asked the question about the Yellen's comments. Here again, folks, that's fundamental stuff. I've never been able to understand quantitative easing. To me, it's a mystery, and I mean a real mystery. I mean, I can understand them creating money out of thin air, but if this would have happened like this back in the 1979-80 period when we had 13% inflation, what we watched was the money supply, because if the money supply went up, that was inflationary, and that worked very well for many years until we came in with Helicopter Ben, and he changed the rules somewhat, but the money supply doesn't mean anything. In fact, what it looks like is that they're trying to convert everybody into going to a cashless society, and that I think is going to be pretty hard to do, but it's certainly possible. Regarding Bitcoin, I have no interest in Bitcoin. The last price I saw in Bitcoin was like 2,400. The top had been 3,100 or 31,000. I don't know, it's 31 something. Yeah, 3,100. But I don't really follow that. I've got so many other things happening that that's just too far removed from what I'm looking at. Now I've had a request to take a look here at the Canadian dollar on a longer term time frame. And if you'll give me 1 second, I've got it ready right here. We are setting right at, as we speak, right now, this morning, we are setting right at the 78% retracement of the move from 2016. That's at 127.63. Now, if that breaks, you're going to be looking at another big move down, because this weekly chart of the Canadian is certainly showing that there's a lot of power in this cycle that could easily take it down, to the 113 level. So if that happens, the U.S. dollar is going to be trashed. But so far, the U.S. dollar is held up above this 95 level, and that's actually a good sign. So that's the main thing. Regarding soybeans, the soybean number was at 10.10. And I believe you have to risk about 8 cents trading beans. So if they get to 10.02, I would say, that harmonic number 1.618 expansion didn't work, and I would, move on to the next one. We got as low as a 10.05 today. It's now at 10.11. So if you bought it at 10.10, it's now 10.11. Take your profit and don't bother me anymore. That's a joke, folks. You have to manage your own money. But so far, that little number is held. But for how long? We have to wait and see. The other markets that we keep an eye on, of course, are the Treasury bonds. And the bonds, the number on the upside we were looking at was, of course, 153.24. We might still get there without any trouble at all. So far, our high has only been 153.12. But anytime we get below that 151 15 level, folks, that's going to be a breakdown in that 382 cycle, and that is going to send the interest rate spiraling to the upside, and bonds and notes going to the downside if that were to happen. So keep a very, very close eye on that. It will be interesting to watch it as it moves through, the cycle that we're in right now. The question also has arisen about the E-mini S&P on a daily chart, and I will bring this up for you so you can take a look at it. This actually is a 60-minute chart giving you the last couple of months, so you're able to see it. Hold on 1 second, please. You'll notice that we did get up to this area. I believe we hit 24.45.5, I believe, or something last night. But that's where we are right now. We're completing that ABCD pattern. This is when the Dow's gone up to make new highs, folks. Now, we did not make new highs in the New York Stock Exchange Index or the banking index. Those or the IBB. Those have been, they had been the leader of the market, and now, they're actually lagging. It's basically a market run by that NASDAQ 100 and the FANG stocks, with the exception of Apple, because Apple has started to really show signs of some very, very strong resistance. Let's put it this way. Remember, it's that you're only talking probably about 12 stocks out of that NASDAQ 100, folks. That's basically the main thing that you want to watch here. So we'll see if that's the case. If you bought those beans, you put your stop under the low there. I believe I said 8 cents. So I would put my stop at the low is 05. I would put my stop at 04, risk 6 cents, and see if it's going to work. And if it starts to go up, I would use a trailing stop just to keep, some profits, in your quiver if you get a chance, because this is a business of making money. It's not a business of being right or wrong, because, you can be wrong in one market and right in another and still make a great deal. So we'll watch this very, very closely. I still believe, another question, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were going to be finishing up here with the gold. We're trading here at 12.19. I still believe we've got a chance to get down to that 12.95 level. That is down $24 from where we are right now. If the gold should happen to get above the 1234 level, then the odds of it getting back to that 1219, 12 to 1195 would be diminished. But right now, I still think it's heading downward. The reason for that is that we've had a really nice move in this thing, but the problem is that it is, not really going to the upside. That usually means that this is just a consolidation heading down, for more lower prices. But we are going to be watching it very closely. We're seeing some good divergence now in the XAU, the gold-silver index, and also the bull-bear index. They're starting to show some positive signs, so we'll keep a close eye on these as we go through and take a look at some of these things. So it's going to be very, very interesting. Regarding the Treasury bond, folks, there should be some strong support in the Treasury bonds at this 152.16 level. So far, we've been to 152.17 today, and if we can stay above that, then we'll be looking at something, that'll be even more dramatic. So that's the main thing that we want to keep looking at. We'll see what's going on, and we'll go from there. Hold on one second. I have to change an order, folks. Just a second here. Okay, and then we'll get it. We'll call, alrighty, to change this to that, and later. Alrighty, all right, got to change. I've got an order in, and I wanted to make sure that if it gets there, that I have it protected. That's the main thing that I want to be doing, because it's not the amount of money that you make, it's the amount of money that you don't lose, and that's the key. Folks, keep an eye on the crude oil. We've had a pretty good move off that 78% level. We hit that spot on at 46.50. We dropped $1.50 a barrel, which is basically two harmonics down, stopped right at 45, and now we're approaching some strong resistance, 46.20.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.